Hey folks, I did it! I bought some Alibaba stock, a decent little sized position at incredible price points on this current rally back because the rhetoric is finally changing and I am calling a bottom here. So I want to break this down because literally just yesterday you would have been reading the worst articles about Chinese stocks. Coming into today, the rhetoric just immediately did a 180 and I want to break that down in this video. I'm going to reveal to you how much I bought at what prices. If that is something that you appreciate and the clarity of my transparency, just do the channel a favor, folks. Hit that like button because many of you know I have been waiting for Alibaba to turn around forever, just waiting for the rhetoric to change, and literally couldn't have been worse timing last night, guys. Just before, I think around market close, JP Morgan listed this saying don't catch a falling knife. And if we scroll down, just read this. The e-commerce giant just basically can't seem to catch a break. COVID has reared its ugly head in China again, and the prospect of US delisting for Chinese stocks is ever present. And these developments clamor on top of regulatory clampdowns in China, a slowing economy, and Alibaba going heavy on the investment side. Now, just kind of rolling back a little bit, everybody knows all of everything they're talking about here has generally been priced into the stock. And because of articles like this and these analysts downgrading it, it fell off a cliff yesterday, I think hitting a low of somewhere around $75 a share. But I couldn't buy it knowingly there, and I would not buy this falling knife. And I've been saying that since $200 a share. I kept telling you guys, just sit, wait, we don't know how low this goes. And even if it jumps up 50% for whatever reason, you can start buying the rally back. And that's where I think we're at. Why? Because, well, just read this. Alibaba and JD.com head for record gains. What sparked the turnaround for Chinese companies? Well, shares in some of the Chinese largest companies notched eye-watering gains on Wednesday after news that the government would support the stock market, boost economic growth, and clear up punishing regulatory environment. So basically, just like the Federal Reserve became accommodative in March of 2020, now the Chinese government is saying, hey, we're kind of heading into a stock market bear market, and it's time that we become accommodative so people start seeing us as somebody that wants to be a future leader. Like, obviously the yuan is going to be likely competing in our lifetime for the world reserve currency. We all know this. We all know the Chinese stocks are cheap as hell. We all know Charlie Munger's been buying it. And heck, yesterday, just an unbelievably turn of events here, guys, Kevin O'Leary basically caught the absolute bottom. This was a guy that would not touch the Chinese stocks, and then basically after they got wiped out, he just literally picked it up at the best price. I want you to listen to this because it's just absolutely insane.
It's in Asia and China. That's basically what it is. It's growing faster than Uber. Yeah, anytime you get an analyst calling stocks, multi-billion-dollar market cap stocks, growing in an economy that's larger than ours, our growth rate is, uninvestable, that's a buy signal. That's what that is. Those stocks were crushed today after being already slaughtered. So they're down another 7 to 9%. There's three that I just bought today. Now, I'm not sure I'll catch the bottom here, but you have to make a fundamental decision. What's been against China, the headwinds for Chinese stocks, all of them, is the ADR structure. To understand that basically the law's been changed on them. They've got basically 24 months to get their audit act in order, or they're going to get delisted stateside. Now, even if that were to happen, which I think it's not going to happen, they're going to fix this before that does, it doesn't stop the growth rate of these companies. There's, yes, a lot of people in China. So if you're trying to figure out how do I invest in an economy that is probably going to be the world's largest economy in X number of years. Look, I know we're competing with them, but that doesn't mean I don't invest in it because I can't get growth like that. And these are the big names there that already have the distribution systems in place. So I'm sort of indexing it that way. Now, you have to hold your nose on vol. You can't put the full position on here because today you may want to start thinking about the 3-day trading rule. To get Alibaba, to get BABA down 7% in 1 hour, that's hard to do. That's a very large market cap stock. So thank you, analyst guy. I appreciate that. But at the end of the day, they're still going to grow. And that's why I bought them.
Now, largely, I do not agree on Kevin O'Leary on everything here, guys. I mean, I followed him in my early days of investing into the Canadian oil sands, and it would have taken up till this point for those oil stocks to rebound from where I were buying them. And Kevin O'Leary, I don't think for most people, he's way too bullish on crypto and he's leading too many people down that path. But God, I think he made the right decision here. And the reason, well, again, I don't think he made the right decision because for me personally, I wouldn't have bought the bottoms, but he caught the bottoms. I wanted to buy where we're at now because basically we know for a fact that this rhetoric is going to do a 180 180. And this news is probably going to compound unless they partner with Russia and China starts doing some crazy things. I don't think the COVID lockdowns are going to affect them. Again, it's so well priced into the company. This needs to be trading for at least $200 to $300 a share. So there's an easy doubling of your money upside in this, in my opinion, probably in the next year or two, presuming this rhetoric continues, because BABA is just a growth beast here. I just wanted to briefly mention this interesting fact here because Charlie Munger doubled down on his Alibaba position sometime at the beginning of January, dumping $71 million worth. And Ray Dalio, these mogul, these iconic investors, also, you know, they're all kind of doubling down sometime at the beginning of this year. This article came out February 15th. And if we go back and look at when they even doubled down, let alone when they first started buying it, guys. So from February 15th, or right around this price target here, it's still down 20-25% from when Charlie Munger doubled down sometime around what, January period here, guys. It's still down 25-30%. So if you're buying it now, you're literally getting a better price than these guys are, even at the rally back. So let's just talk about exactly how much I bought, because I couldn't buy as much as I wanted to, but either way, in the corporate account, being 100% transparent here, folks, I bought 55 shares this morning, and I did this kind of in 2 lots. Now, I literally took me 2 seconds to come up with this decision to buy this, because I don't care what was going on yesterday. I only care what's going on today, and you can't sit on your hands when you know something that you think you know, right? And it's kind of like gambling or speculating, where you're kind of presuming that the odds are much higher in your favor than they would be not knowing this news. So again, picked up 55 shares. I picked up over, I think, about 2/3 of this position at an $89 a share this morning. And then I bought the rest of it at about $90 to $93 a share. Where BABA sits right now, let's just take a quick peek. So those 55 shares are looking pretty nice as we continue to head higher. This is very exciting for me, guys, because like I was talking about with the US stocks, now that we're heading into the Federal Reserve meetings, where a lot of people are expecting the Fed to be somewhat accommodative with low interest rate hikes, we can see the stock market is generally rallying back. In fact, let's just take a look at the old StockTwits account here just to offer some insights there, because generally the whole markets have been rebounding pretty nicely today. But arguably, guys, the only 2 companies, let's say I was brand new to the stock market, that in this current environment with the news that we now have available, I would be loading up on Facebook and Alibaba. Now, obviously my Facebook position is largely built out. I don't want to take on more risk in that investment. But again, you have to understand, guys, where the most value is in the current environment. Alibaba, Facebook. I still feel like Facebook has a lot of bad rhetoric around it, but the Chinese rhetoric is changing. Something tells me you buy these 2 stocks, come back to me in a year, you're going to be very grateful at the prices you pick them up at. Now, God knows, nobody knows what the future brings, and I'm just making some short-term predictions here and at least putting my money where my mouth is. So I hope you guys can appreciate that. I'm going to reveal like a whole portfolio breakdown as I do at the end of every week. So consider subscribing, because I have been doing a lot more shuffling here. And again, my portfolio seems to be benefiting from this, because we are literally a few points out from all-time highs. So I feel like I'm over managing, but that over managing has definitely protected me from the downside that we've experienced. And at this point, folks, I want to pass the question off to you. Do you think Chinese stocks are officially a buy here, or do you think you should continue waiting, or do you not touch those kind of foreign investments because they're run by a communist kind of country? I'd love to hear about all of that in that comment section. So stay cool, stay awesome, and as always, I look forward to catching you in the next one.